The house always wins. Everyone knows that. It's printed on the back of every lottery ticket. And yet sports betting apps have made it feel like skill. Like you're not gambling, you're just really good at football stats. That's the con. That's the whole con.
And the apps are designed so that the line between investing and gambling has basically dissolved. Like, buy the dip and back the underdog are the same psychological move now.
That's mental. That's properly mental. And nobody talks about it like that.
Welcome to Sunk Cost. 2 friends, 1 mic, and a lot of opinions about money. I'm Sofia, that's Alex, and we dig into what modern life actually costs us and whether it's worth it. New episodes every Monday, Wednesday, and Friday. Today we're talking about gambling, specifically why it's exploded, why it looks so different now, and whether the whole thing is one giant psychological trap. Alex, honest question. Have you ever placed a bet on something you genuinely believed was not a gamble?
I mean, yes. Absolutely yes. I once put a tenner on Arsenal to win the league and I told myself it was analysis. It was not analysis. It was hope dressed up in a spreadsheet.
Okay, so that's the thing right there, the rebranding. Because nobody's gambling anymore. They're investing in their prediction. They're playing the market. The language has completely shifted.
And the apps leaned into that massively. Like, the old image of gambling was a bloke at a betting shop on a Tuesday morning looking a bit sad. Now, it's a lads group chat. Everyone's got a 5-team accumulator going, and it feels like a social activity. It feels fun.
And that's the design. That's not an accident. These platforms spent years figuring out how to make gambling feel like a game, feel like a skill, feel like community. Because all 3 of those things lower your psychological resistance to losing money.
It's the same thing they did with trading apps, isn't it? Like the whole meme stock thing. GameStop, all of that. That had the same energy as a big accumulator coming in. Everyone in the Reddit thread going absolutely mental. It felt like a team winning.
That's exactly it. And here's where it gets interesting. Because the meme stock crowd genuinely believed they were sticking it to hedge funds. There was this whole eat the rich framing. But behaviorally, psychologically, it was sports betting in a blazer.
Okay, but I want to push back on that a little. Because I think there's a difference between someone buying a meme stock because they want to watch a hedge fund lose money, and someone putting 50 quid on a 4-team parlay because they're bored on a Friday night. The intent is different.
The intent is different. The outcome distribution is the same. You're both in a situation where the odds are not in your favor. You're both getting a dopamine hit from the possibility of winning, and you're both more likely to lose than gain. Intent doesn't change the math.
Right, but okay, Sofia, you're doing the thing where you reduce everything to expected value and you strip out the human part of it. Sometimes people know they're probably going to lose. They're paying for the experience of maybe winning. That's real.
I don't disagree with that. I actually think that's a legitimate way to spend money. Like a $5 on a bet you know is long odds, you're buying entertainment. Fine. My problem is that the platforms don't price it that way. They price it as skill. They give you stats, they give you insights, they make you think you have an edge. That's where it tips over.
The illusion of control thing.
Huge. It's one of the most exploited biases in behavioral economics. The moment you feel like your knowledge or your effort affects the outcome, you start betting more and accepting worse odds. Sports betting is built on this. They want you to think your football knowledge matters. It barely does.
I need you to tell that to every bloke in every pub in England, because the confidence in those conversations is extraordinary. Like, someone will be 3 pints deep explaining why a particular left-back's XG stats in away games means the over is a lock.
Oh my God. The over is a lock is the new, this stock can only go up.
To be fair, if Diego the Cat started making picks, he probably beat most punters over a season.
Diego is absolutely not allowed near my phone after what happened with the Uber Eats app. But honestly, he might.
Okay, here's what actually gets me though. And this is the bit I think is underreported. The amounts have crept up in a way that nobody really talks about. Like, it's not just that more people are betting. It's that the average bet size has gone up because of in-play betting. You can bet on the next throw-in, the next corner, the next free kick. It never stops.
In-play betting is genuinely the scariest development in all of this. Because traditional gambling had natural stopping points. The race ends, the match ends, you either collect or you don't. In-play removes every stopping point. There's always another micro event to bet on, and the losses are small enough that your brain doesn't register them as a big loss.
Death by 1,000 micro bets.
And this is where it connects back to meme stocks and crypto and all of it. Because the same mechanic exists. You can trade constantly now. You can check the price every 30 seconds. The friction is gone. And friction, it turns out, was protecting people.
Right, and I'll say this, and people are going to hate this take. I actually think some of that friction should come back. Like a small mandatory delay before you can place an in-play bet. A cooling off. And I know that sounds paternalistic, but the companies aren't going to do it voluntarily, so.
Okay, I was not expecting you, Alex. I booked a flight at midnight for the next morning and paid 400 quid to be advocating for mandatory friction.
Look, I contain multitudes. I also deeply regret that flight.
I know you do. You told me about it for 3 weeks.
It was a lot of money for a very short trip. We don't need to revisit it.
But actually, that's a really good point on friction. And it connects to a broader thing I want to say, which is the companies that run these platforms are not neutral facilitators. They are very actively optimizing for your continued engagement in ways that are not in your interest.
The personalized offers thing is wild, right? Like, if you haven't bet in a few days, you get a push notification with a boosted offer specifically on the team you always bet on. How do they know? Oh, right. Because they've been watching everything.
They know more about your betting psychology than you do. They can identify problem gambling patterns before the gambler themselves can. And they've admitted this in various legal cases. They know, and they still send the notification.
That's the bit that makes me properly angry, that is. If you can identify someone who's in a spiral, and you still send them a personalized, enhanced odds just for you message at 11 at night, that's not a company making an honest product. That's predatory.
And the reason I don't want to just call this an individual failure, like people should just have more self-control, is that these systems are engineered specifically to defeat self-control. Variable reward schedules, loss-chasing mechanics, social proof from your friends winning, these are not accidents. This is applied psychology deployed against you.
And the meme stock thing is the same. The Reddit threads, the influencers posting gains, screenshots, but never the losses. The feeling that you're in on something. It's social engineering dressed up as financial rebellion.
Okay, final boss take. And I mean it this time.
Go on then.
The most dangerous thing about modern gambling, sports betting, meme stocks, a lot of crypto, is not that people are losing money. It's that it's eating the savings behavior of a generation that already has a terrible savings rate. Because the people most likely to put $50 on a parlay every week are the same people who don't have an emergency fund. It's not a leisure spend. It is structurally replacing long-term financial stability with short-term lottery logic. And we've built an entire entertainment ecosystem to make that feel rational.
That's okay, yeah. Because if you said to someone, put 200 quid a month into an index fund, they'd say they can't afford it. But the same person is absolutely putting 200 quid a month into bets across the season and not clocking it because it's spread out in small amounts.
Exactly. The drip is invisible. It doesn't feel like a sacrifice the way a direct debit would. But the opportunity cost over 10 years is enormous.
And look, I'm not saying nobody should ever have a bet. I'd have a flutter on a match. I'm not a saint. But there's a version of this that's a fiver for fun. And then there's the platform version, which is designed to make the fiver feel like the beginning of a strategy. And that's where it gets dark.
Yeah, and obviously we're two people with opinions here, not your financial advisors. God, please don't take money advice from us.
Especially not from me. I currently have, and I've just checked my bank, at least 4 subscriptions I cannot identify. I am not the person to be guiding your financial strategy.
4 mystery subscriptions. Living the dream.
One of them might be a meditation app, which I have never opened. So I'm paying for peace of mind I'm not receiving.
That is genuinely peak sunk cost content.
It is, isn't it? I'm basically an episode every month.
Okay, wrapping up. The big takeaway this week. The reason everyone's suddenly gambling is that they've made it feel like something else. Skill, strategy, community, rebellion. The emotional repackaging is doing a lot of heavy lifting. And if you can name the repackaging when you see it, you've got a fighting chance of making a cleaner choice. That's the whole game.
Well said. Genuinely.
Monday, we're back with a new episode. And it's a new week, so it's Alex's turn to host. We're getting into why weddings cost more than a house deposit now, which I feel like Alex has opinions about.
So many opinions. So many. I have been waiting for this one. There's a word for what the wedding industry does to people, and that word is highway robbery. And I will explain at length on Monday.
Perfect. That's exactly the energy. Thanks for listening to Sunk Cost. See you Monday.
Cheers, everyone. Don't do a 4-team accumulator this weekend. Or do, but know what you're actually buying.